All right, good. So you're welcome, everyone. So like I said before, we'll be talking about two things tonight. Okay, we'll be talking about the basics of copy and paste. That's the basics of copy and paste, and how to reduce your fare or take care of your fare using the risk management strategy. Okay. Now, why am I coming up with this topic? I realize that most of the time when we are in a trade, now when I look at the result of most of you, I see that most don't know how to maximize the opportunity. I mean, it's either they don't enter at the right time or they enter at the right time, they quickly exit because of fear, or somehow I just see that they are not taking enough. For example, I mean, I'm talking about my signal, right? The one I sent to the group for the subscribed members. Okay. Now, despite the fact that it's about my signal, the same thing applies to every other signal. The one you take from Eminos Trade Ideas and the one you take from Eminos Nepal, the one you take from Manara Trade Ideas and Sessions, the one you take from Manara and Forex, whichever idea, this same thing is applicable to all of them. I mean, it's to help you maximize. Now, for those of you who probably have been in my session before or in a call like this before, you remember I told you there are three major things you do when you're in trading forex. There are three major considerations you have to look at. These are non-negotiable, right? And I put them in the order of priority. And the first one, if you can remember, I said first one is what? Securing your capital security. Okay, you understand? So that's so that is first thing. So what does that mean? That means when you are trading forex or whatever you're trading at all, okay, your first aim is to minimize the losses on your account, to minimize the losses on your capital, to protect your capital from getting blown out. Because even if you lose today, so long you can manage the level of loss, you still have enough money to trade tomorrow, which may give you opportunity to make both the one you lost yesterday and make even more to progress your account. So we call it losing forward. Losing forward. Losing forward means, let's say you started with $1,000 in your accounts. Okay. And while you're trading, let's say the first trade you took, maybe a loss. Okay. And this loss, let's take about 3% of your accounts. Takes like 3% is about $30, right? Of what? So 3% of $1,000 is $30. Now, $30 is not very big money compared to the capital you have there. So you'll be having like $970 there. Now, that is okay, because the truth is, the first thing you need to have at the back of your mind when it comes to Forex is there is nothing like 100% guaranteed that you will not lose. As a matter of fact, losing is part of the game. It's part of the plan. It's actually an essential part of the trading. You can never learn without losing. And for God's sake, it's market. It's the market. These are normal human beings in different part of the world, different world economies, you understand, coming together. I mean, they are trading. They are doing normal businesses, normal transactions. For example, depending on the country you represent right now, the area you represent, we all have banks, you have institutions, you have insurance companies, you have, all of these companies. You have government bonds, you have, treasury bills, you have real estate investment. All of these investments put together are the transactions that comes together to form the general market, the financial market. And this financial market is exactly what determines the economy of a particular country. The economy of that country is what determines which currency will be bigger or more stronger than the other at some particular time. So all of these transactions put together determines what goes on in the world, global financial institutions. You understand? So we can't expect you to be so good that you can predict and accurately, take decisions on the market and it goes your way every time. I mean, even the banks don't. The banks that are in charge of this whole thing, the banks are also forex. In fact, they are the big guns when it comes to forex trading. All the money they take from you, you all know. All the money you save in the bank, all the money you give to the insurance company, all the money you give to treasury bill, bonds. These are the things for them to give you all those profits or interest you get on them. They trade with your money. Do you get it? Now, they lose sometimes, as a matter of fact, yeah. So losing is part of the game. That's the first thing to kill fear in your mind. When you say, I'm afraid of losing, no, losing is part of the game. So that's, by the way, I just wanted to know that first of all. So I was talking about three essential things you need to look at. Number one is securing your capital. So which means if losing is now a necessary evil, let me use that word for it. If losing is a necessary evil, so the question now is not about not losing, it's about losing forward. It's about making sure that you minimize to the barest level the level of losses you'll be accumulating, you understand, or incurring. Let me use that word, okay? Now, so in doing that is where the first principle comes in, securing your capital. So when you take a trade, as I was saying before, you have your $1,000, you take a trade of, and then you risk only 3% of that account on that trade. And if you lose, the problem, $30 will be out of the money. Do you know why it's good to, I mean, you lose that way? I mean, you have the opportunity of making that money in the next trade. Why? Because the next trade, if it's going to be a win, will give you $40, could give you $50, could even give you the $30, could give you even 70, 100. Either way, you are either break even, whereby you're back to your capital, or you are back with your capital with small money on top of it. But not that you want to take a trade, you don't have a percentage you're putting out in it. You don't care how much goes out of it because you just want to win by all means. Now, the problem of making sure you're trying to win by all means is another reason why people get lose all their money. Now, if you're like that, you may gap $1,000 and your first trade ever, you lose $100. I mean, how many trades will you have to take to lose before you blow the whole money? So that's the first thing. Securing your capital means what? Making sure that you only risk very little percent of your money in the market. So you protect it that way. Now, the second thing that is important now is taking profits. Now, securing your profit, sorry. I said the first one is securing your capital, the second one is securing your profit. Securing your profit is the second thing you need to look at. How do you secure your profit now? Whenever you're in the market and you are in the trade, the moment you start seeing your trade going into profit to some certain level, at least I always give or take my own, what's it called? I always use this yardstick, which is anytime you see at least, let's say, 5% of your account. You understand? 5% of your account. You're in the trade, you're using $1,000 to trade, and you already see 50 or 50 USD. Start securing that profit. Securing means, doesn't necessarily mean you close your trade. It means you make sure you set your trade in a way that even if that trade is going to be going back to loss, you will not be losing at all. Rather, it will close on you, but it will be closing with some profit. So meaning you are not losing at all. You get my point? That's how to secure profit. Now, the last one, which you focus on now, is now maximizing your profit. That's profit maximization. Now, that's the part where you secure the profit you have and you still leave room for more profit to come in without risking the capital you have there. I want you to note all of these three things I just said. And the best way to enjoy this call, the best way to make sure this training tonight, stick with you is by jotting, taking notes. It's very important. Well, you'll be having this video made available to you afterwards, but make sure you take these three things because it's going to be like our yardstick, which we'll be using as guidelines to explain or go into details of tonight's training. Okay. All right. So these are the things you need to check, the three things, right? Now, in order to do that, so let's quickly start with the basic. For the purpose of those who just came, I mean, I know most of you already know how to do the copy and paste, okay? But just look at it and see how it works again, So when we talk about copy and paste, it's about, though we may have issue because this is the weekend. Okay, we use Bitcoin. I think Bitcoin always moves every day, and then I have to look for a demo account. So I won't use my real account, okay? All right. So when it comes to copy and paste, okay, when it comes to copy and paste, I think before I go into copy and paste, you need to know some words, some terminologies, okay? All right, let me teach you copy and paste first of all, then we'll go into that terminology. So I'm going to be sharing my screen right now. Okay, usually I'll ask one of you to share your screen, but I just want this to be very fast, okay? Now, let's do it for example. Let me go to Bitcoin markets. Let's see this. Let me look for Bitcoin market and coin. Use this term. All right, so guys, now let me look for. You see, the market is closed, so you'll be seeing any of the pair moving except cryptocurrency. So we'll go for BTC USD. BTC USD. Okay, I have it on today. Check. Sorry, okay, it's there already. Okay, this is it already. All right, guys. So let's say now look at it. Let's say let me look for where to type that. Okay, all right. So let's say sorry, yes. As I want to put it out here so you see it. I mean, the way we put out signals. Okay, let me go to the signal group. Let me go to the signal group. Oh, let me go to the signal group. So, for example, if we're taking a trade now, I'll say, okay, guys, let's buy BTC USD. If I say buy, what is wrong with this worksheet? Okay, I think it's here already. Well, I'm not using it. Let me just use the whole group, the signal group. It's off. All right. All right. So let's say I send the message like this. Okay, before I go into that, I think there's this thing that sorry guys, that was the network issue there. Okay, let me go back again. I went off for a while. I don't know if you all noticed anyways. Okay, I was here. So let's say I put up like, I was talking about the languages, right? So sometimes when I say buy, let me just start with the normal one. So the normal thing is say buy BTC USD. Okay. If I say buy BTC USD, we don't trade this. I'm just telling you, like, give you an example. Okay. And I said, I'll put like entry. Entry price means the price at which I want you to buy it. Okay. Let me say entry price at 30,000. And I'll put stop loss. Stop loss is SL. So when you see SL, you know stop loss, right? Stop loss at 28,000. We are buying, right? At least I know you guys must have passed that stage. You already know that buy means the price should go up. You expect it to go up. Oh my God. Guys, can you hear me at all? Are you with me at all?
We're with you, but we're not hearing you.
None of you is saying it.
We thought it was your network.
No, I've been talking. Actually, I didn't know that I was muted. Because if you had said it, I would have noticed. Can you imagine? I've said so much.
What is saying it now?
It's okay. All right, let me just go again. All right. So I was saying that we have different type of orders. We call them orders. Okay. We have market execution, we have buy limit, we have sell limit, we have buy stop, we have sell stop. Now, forget about the buy stop limit and sell stop limit. Those, we don't use them. Since I've been trading Forex, I've never seen anybody use them before. I've never heard it before. I mean, we don't use them. So okay. Now, what is market execution? Market execution simply talks about a type of order whereby you are meant to execute. Looking at the word execute, market execution, to execute, to buy or to sell at the current market price. At the current market price. So, which means if they tell you buy BTC now, do you get it? Sometimes I send you signals like buy gold now, sell gold now. When I say now, you don't wait for what price, what parameters should we set, spend, no. You go there and buy first of all. You buy first of all. Okay, I will tell you how to what do you call it, to arrange the orders such that to fit into your risk management plan. Okay, now so you buy now. That is called market execution. Executing the market, executing your trade at the current market price. That's the meaning of market execution. So if I say buy BTC now, okay, let me say buy BTC now. Okay, what do I do? Look at it. You see buy by market, sell by market. So these are execution button. I hope you can see, guys. So if I say buy now, I'll buy at the current price, which is what is it now, right? Now, the next type of order, or the orders that we're talking about, the next type of orders we're talking about are the depending orders. We call them depending orders. What are depending orders? We have the buy limit, the sell limit, the buy stop, the sell stop. Those four. Forget about the last two. They don't exist. Those four are what you focus on: buy limit, sell limit, buy stop, sell stop. Now, if you look at it, so let's take them in category. We have the buy category, the sell category. Of course, you all know when you say buy, you are expecting the market to go up, meaning you are banking your money on the prediction that the market will go up. When you say sell, you are banking your money on the prediction that the market will go down. We know that, right? So when we categorize them, we have buy and sell. So we have buy limit, we have buy stop. We have sell limit, we have sell stop. So what is the difference between these two now? When you say you have a limit and a stop, okay, let's go to buy category. So when we say buy limit, the difference between the buy limit and the buy stop is this. When you say buy limit is simply telling you that, simply saying that you want to buy this particular instrument, whether BTC, whether gold versus USD, whatever it is. You want to buy it, but not at the current price. You want to buy it at a later price. But that later price must be lower than the current price. I want you to note that one. Note this one. You want to buy at a lower price than the current price. That is when you use buy limit. Hope you get that point. Now, so let's say, like I gave it, I said buy BTC at 30,000. Look at the order I gave you here. I said buy BTC, entry price 30,000. Now, this kind of order, what will it be? What kind of order will it be? If I ask you to buy BTC at 30,000, looking at the current price now, what kind of order would that be? I need the response from you guys. What kind of order would it be? If I ask you to buy BTC at 30,000, looking at the current price is 30,119, which means it's already gone past 30,000. But I want you to buy it at 30,000. What kind of order will you be using? Let me see. All right. Yes, pending order. What type of order? So buy limit. Buy limit has it. The buy limit is what you use. Why is it so? Because I defined it, and that's how you need to write down now. I define buy limit as any order that you are making, understand, that will be lower than the current price. So if any order that you'll be making using the price that is lower than the current price. So if I say buy BTC at 30,000, of course, obviously you see that BTC is at 30,134 right now. If I say buy it at 10,000, I'm asking you to buy it at the lower price. So it's not there. So what do? You go on to choose a buy limit. Buy limit will give you room to set the price you want it to. So you are telling the market that, hey, I want to buy this BTC, but I don't want to buy it at this price. I want to buy it when it comes down. Okay. So you set the price. The moment I click on buy limit, you see that the whole interface changed. Before now, there was no price here where you can set a price. But the moment you click on buy limit, it gives you the room to set your price. So you tell the market, this is the price I want to buy. Whenever it comes to this 30,000, activate my order and take it up from there. So buy limit means you expect the price to come down to pick you up and then now start going up. Now, I said TP. What did I call the TP? I said TP 32,000. So what do? You come to the area of TP, you set it at 32,000. Okay. Then I said stop loss 28,000. Stop loss 28,000. So you come to the SL area, which is stop loss 28,000. And then what do? You place order, and the order is placed. That is buy limit. Remember, buy limit is when you what? When you decide to buy at a lower price than the current price. Now, what is the second one? We have the buy stop. No, we're on the buy category yet, right? So we have the buy stop. The buy stop is a type of order, whereas you wish to buy at a later price, which means at a higher price than the current price. So which means now this BTC is 30,117. But this time around, I ask you to buy BTC at 35,000. Well, let's say at 32,000. Okay. So let's say I say buy BTC at 32,000 or 35. Let's maybe say 30,000. Okay. This time around, the TP will be 35,000. And then I would like the stop loss to be 30,000. Now you'll be wondering, why would I want to buy BTC at a later price? I mean, I want it to be higher before I start buying. I mean, I'm supposed to buy when it's lower. Now, there are conditions that warrant that. I want you to listen carefully so you know the reason for this or that, right? The condition that warrant that is this. For example, in the market, as a person who is analyzing the market, so let's say I know that based on my analysis, I know that BTC is at 30,109. It looks as if it's going up. But I'm not the going up, the tendency of it going up is not sure yet until it crosses a particular price above. Now, until it crosses that price above, that's when I'll be sure that, oh, this time around, I know this will continue going up. But maybe right now, I think maybe right now, if you go and put a buy, it may start going down from here. This place is not strong enough. You want to get to a support area where it's very strong, that you are not sure that if this is going to get to 33,000, then it means it will start going up from there. So you only use this order based on that. So, okay, I don't want to buy now. I will only buy when it's 33,000. I'm sure that if it gets 33,000, definitely it's going to 40,000. Hope you understand. If you understand, put a 1 in the chat box, please. If you understand what I just explained, put a 1 in the chat box. We are talking about buy stop now. So buy stop is when you are making an order based on the later price, a future higher price. Okay? So it's only Buchi that understand. Okay, Zeke understand. Who else understand? Put a 1 if you understand. Put a 2 if you don't. Put a 2 if you don't. I want us to be fast about it. Okay, because you know it's recorded. So when you are watching, you don't have to stay longer to watch. Okay, Doris don't understand that. Okay, good. Now I can explain again. So buy stop. I said buy stop is a type of order that is used, okay, for a later price. So you tend to buy this market, you tend to buy this instrument, but you don't want to buy it at the current price. Neither would you want to buy it at the lower price, but you only want to buy it at a more higher price in the future. And I said that, you see, because it sounds crazy. If I don't give you the reason, I mean, how would somebody, okay, just like you go to the market, you want to buy a car, and they tell you this car is $10,000, right? And you're like, oh, I'm not sure I'll buy this car yet. Meanwhile, you buy and sell cars, right? Like, I don't want to buy this car yet. I want to make sure that the car gets to $10,500 before I start buying. I mean, someone will look at you and say, Are you okay? Are you normal? I mean, will you make more money when you buy more, as in when you buy higher? Do you get? So I'm giving you the reason in the market. Now we do this only when we notice that the particular price the market is now is not enough, you understand, assurance that the market will continue going up until you get to a particular higher price in the future. They will now know that, oh, this particular price that it is now is not strong enough. But we only get assurance when you get to a future price that is higher than this. Do you get? So when we have this kind of feeling based on our analysis, we now use buy stop. Though usually buy stop is used less frequent than limit. Limit is more used more often, okay? But this is where you use buy stop. So remember, I'm talking about the buy category now. So meaning you expect this price to go up at a particular level. From there is when you want to start buying. Now, when you want to do that, how do you put in the order? So you click on buy stop. Now, when you click on buy stop, the good thing about this system is if you do it wrongly, if you input any number that is lower than this current price, it will not accept it. Let's try it. Because we have changed, the order is buy stop, okay? The system will not accept anything lower because buy stop, the system knows that buy stop means the price you are putting as your price should be higher than the current price. So let's say we put 30,000. See what happens now. Let's put 30,000. Okay, let's put the TP. You see now, do you notice one thing? As soon as I put this, the 30,000, the place, the area I'm supposed to have the place to place the order is not highlighted. It's in gray area, which means it's not allowed. But let me change it to, let me even change it, even without putting the TP. Let me change it to 30,000, 33,000, which is higher than the current price. Do you see it now? Can you see it that the place order is showing? So that's how it works. So I'm using 33,000 because that is where I want it to start buying. And I expect it to get 35,000 as my TP, and my stop loss will be 30,000. Okay, so I'll click on place. So that is how to what? That is how to place a buy limit and a buy stop, and I'm giving you their reasons. Okay, now let's go to sell stop and sell limit. It's the same thing, just a different direction. It's the same definition. So when it comes to sell limit, so if I say sell, let's start from the first one, market execution. If I expect this market to go down from here now, what do? I'll just tell you guys, sell BTC now. When I say now, I mean buy it at the current market price, which means market execution, executing the trade using the current market price. So what's the current market price? Whatever price you see there, whenever you open your broker. When I say whenever, that doesn't mean like 10 minutes, 5 minutes after the call has been made. It has to be instant. You have to be very fast also because price move faster, okay? So let's say I say buy BTC, sell BTC now. What do? You open your broker, you come straight to what? Sell by market, and you click. That's after fixing your lot size. You remember your lot size, right? Okay, very important. But we'll talk about that also when we get to risk management. So what do? Fix your lot size, you sell by market. Now you see, you're done. Okay, sorry. I didn't put you let me use the parameters. I'll use the parameters, okay? So when I say sell, this time around, I'll say sell BTC. Remember, sell means what? You expect the market to go down. You expect the price to come down, to come lower than whatever it is now. So if you're going to be selling, you want to sell at a higher price, right? So let's say I say sell this market at, okay, when I say sell now, okay, I'm talking about sell now, right? So I say sell now. Now, if I'm selling, my take profit, your target will be lower because you are selling. So you're expecting the market to come to 25,000. The price will be lower than the price you are coming in from, okay? The stop loss will be higher. Stop loss is simply telling you that in case this trade doesn't go your direction, it's going against you. You want it to stop, okay, at a particular level. So that will be higher than where you are. So stop loss will be, let's say, 32,000. Okay? So now, what do? It's so easy. Just copy this and come here. So what do? You put, let me go back. So you click on modify. Okay, don't let me use modify yet. Let me just use another order. Let me take another order because I forgot to put the parameters for you guys the other time. So let's say I say sell now. Okay. Now when I say sell, I'll put the price, the TP, If I say sell now, sorry also. So whenever I say sell now, you sell first. I think that's what I should do. Whenever I say sell now or buy now, I forgot to tell you that. Whenever I say sell now or buy now, when I say buy gold now, sell gold now, forget about stop loss and TP. You sell or buy first because of the movement of the price. So it won't leave where you're supposed to buy from. You know, by the time you say, okay, let's say I say sell now, and you click on new order, and you're supposed to sell at this price that it is now, because this is the price I wanted to sell. But while you are doing that, you are still fixing your TP. TP, coach, what's the TP? While you are writing TP, okay? TP 30, let's say you put your TP at 25,000. You see, the price is already changing on you. I mean, well, it's good if it's changing in your advantage, which means it's going higher. But what if it's going already lower? What if by the time you're done, it's already at your TP? You miss it. So what do you do? Whenever you see buy now or sell now, both ways, you do that action first. So see what you do? You sell first. Then after selling, you now come back to modify. So how do you modify? You come here, you tap this order. It will give you these options. You click on modify. Modify means you want to change some stuff. So now you can now come here and put your TP, but you know that you're already in the trade. Okay? So you put the TP. What's the TP again? 25,000, and then the SL is what? 32,000. So you can now do this. TP is what? 25. SL is 32. Then you click on modify, and your order is done. Okay? So this is how you use all these things. Okay? So copy and paste is as simple as copy and paste. It's just for you to put in the values as you have seen them here in your broker, and you take action. That is that. If you have any question on that, you can ask me in the chat box later on. I'll be attending to questions, okay? So we can move further. Now, very important. We are done with the basic of copy and paste right now, okay? We are done with the basic of copy and paste. What we want to talk about now is risk management. Now, talking about the risk management, the first thing you want to think of is, remember the three things I told you, right? Security of your capital, security of your profit, maximizing your profit. Now, all of these things, they all boil down to one thing: lot sizes. They all boil down to what? Lot sizes. Okay? What are lot sizes? Lot sizes are positions that helps your trade to activate based on the amount you instruct the system to use from your money. So lot sizes are just positions. They help you position your trade such that it goes in line with the amount you intend to spend on a trade. Now, remember the topic of this whole thing is what? How to reduce your fear in trading Forex by following the risk management strategy. Now, what makes you fear when you trade? I want someone to give me an answer. What brings the fear when you trade? I mean, you can unmute yourself and give me an answer. Anyone? What is the fear? What gives you that fear? What put the fear in you when you're about to taking a trade?
Okay, can I talk?
Yes, please go ahead.
Okay, number one, I'm scared. Am I going to lose this trade, or I will gain the trade? So this will make me bring fears to my mind.
Good. Now that's the whole thing. Now let's talk about the psychology of that fear. I mean, the reason behind that fear, the fear of losing. Let me give an instance. Let me give you a scenario. How many of you have done something before whereby they tell you, oh, do this thing, and someone will tell you that, oh, this thing you want to do is not really, and then you're like, well, you know, the money is not much now. After all, if this thing, if I lose this kind of money, I won't feel it. So let me just try it. If it's fine, if it goes fine, if it doesn't. How many of you have had that feeling before? I've done something like that before. Maybe just like this feeling, oh, how much is this money? Let me just try it. If it goes fine, if it goes well, fine. If it doesn't, still fine. I won't die now. This money will not kill me. Have you ever heard that before? Heard that from someone or yourself? Have you had that feeling yourself before, or you've heard it from someone before? Have you ever felt that way before? Anyone? Hello? Hello?
Coach, a lot.
You say
Lot
what?
of time.
A lot of time. Good. Now, do you know why you say that kind of thing? Because you've seen the money that is involved, and you know that this money is something that you can actually dash out anyhow without any feeling, without any emotion attached to it. Right. Now, that is how you trade Forex also. The rule of Forex is never ever trade with the money that you cannot afford to lose. The moment you trade with the money you can afford, that you cannot afford to lose, then you are doing it wrongly. The first rule of the game is never ever trade with the money that you cannot afford to lose. Do you get my point? Do you know why? Because when you trade with the kind of money that you know that even if this one goes from my capital, I won't feel it, or I won't feel it that much. It will give you relaxation of the mind to enjoy the trade and enjoy this session. But the moment you start trading with the money that you know that you cannot afford to lose, it puts you in the very big tension. Now, why do people do that? Why do people put themselves in that kind of position? The psychology behind that is because most times we trade based on how much we want to make. We don't trade based on how much you can afford to lose. Rather, you're supposed to trade based on how much you can afford to lose, not how much you can make or potentially. So let me give what I mean. Well, let me give an instance. So sometimes someone is trading with $100. He's thinking in his mind that, oh, this trade that they want to come, at least let me make like $50 from this trade. Now, for me to make $50, I need to increase my risk size to $50 time. Now, the problem with that is for you to make that $50, maybe you need to increase this risk size to $30. Now, the moment you put in $30 as a risk just to make $50, but forgetting that $100 is all he has, and knowing that if $30 goes out of his $100, 30% of his money is gone already, which is enough for him to be afraid of. Almost half of your money is gone. Now, when you enter such trades, your mind will not be at rest. So for me, that's why when I see people over leveraging, I don't celebrate them. The moment you start doing more than what you're supposed to do, put in a trade, even if you win, I don't celebrate that win. Some of you may have noticed someone like that in the group. There was a guy that came one time in the group that was just coming with crazy stuff. I don't even celebrate it. I prefer to celebrate somebody with $1, $2 than somebody with $1,000 doing it wrongly. Now, I'm not saying I won't celebrate somebody that makes $1,000. As a matter of fact, I want you guys to make even $10 million. But so long you are doing it right. Do you get the point? Now, in order to prevent this accident, to prevent this headache, you need to download an app. Normally, there's a manual way of calculating it, but it's just like now that you have computers, you decide to be using typewriter. That would be foolish, isn't it? So you don't need those days. I can give you the formula now, how you calculate, but that is nonsense. So long we have apps for all these things now, right? So for me, I either use FX calculator or use my FX book. But I think this one is more straightforward, the FX calculator. Okay. How many of you have this downloaded on your phone? I think there's both for iOS and what's it called? You can get it on App Store or Play Store. Either way, you can get it on all of that. How many of you have it? If you have it, put a 2 in the chat box. If you have this app. If you don't, put a 3. If you do, put a 1. And I want you to be fast about this so we can move like the speed of the light. Okay. If you have it, put a 2 in the chat box. If you don't, put a 3. It's a must you have it. It's a must you have it. It is a must you have it. So if you don't have it, those with 3, please make sure you download it right after this class. Okay. It's very important you have it. As a matter of fact, let it be your guide. Okay. It's important you have it. All right. So let me assume you have it. So you just go to your Play Store, your App Store. Let me just, of course, you know how to do that. Remember the symbol, the logo is very important because they've made several one come out for you. So you just have to go by this one. So let's say you go to your Play Store. I use Android. So for those of you who use what's it called? iPhone, you need to go to your App Store, right? So you type FX calculator. Okay, to bring different type, but this is the type you want, the first one. Okay, this is the type you want. This is the type I use. So I'm recommending what I use anyway. So, okay, I even need to update mine anyway. So this is what you look for. Okay. See that the review is good. I love everything about it. Blah 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 blah. I mean, I'm not here to advertise the app. I'm just saying it so you choose. It's simple. That's for me. For beginners, I mean, it's easy, simple. Okay. Sorry guys, I'm just updating it. So let me see if you can work while the update is ongoing. All right. So now, how do you use it? This is very important. Now, you know, we all have different type of funds. Okay. Now, the more your fund, the more the tendency of more you make more as in while trading, right? But make sure that whatever fund you have, you trade accordingly. You know, you trade according to the level of your fund, right? So when you click this app, when it opens, this is the first thing you see. Welcome, right? Now, these are the things you can calculate on this app. You can calculate your Fibonacci, blah blah blah, all these ones, but that's not. So the only one that concerns you as a beginner now is the one that we call the position size. The position size, this one. Okay. So what do? You click on position size. Now, when you click on position size, you come to this part. Now, I think the default currency is USD, but in case yours is not USD, you come to the account currency. You come here and then you type USD. It comes up, click on it, and then it comes in, okay? Now, whichever currency you want to trade, it works for all currency. I mean, all instruments, including currency or metals. This is metal, gold versus USD. XAU is gold, okay? So what do? You click. Oh, sorry. What is it again? Okay, I think it's updated now. So it took me out. Maybe it's installing. Let me see. All right, let me open it from here. Guys, I want you to pay attention, okay? You know, Monday is closed now. I want you to use everything you learned tonight. So at the end of the day, we all smile with the profit we make and you make withdrawals, okay? All right, so we'll go to position size, okay? So the currency is USD now. Now, the instrument you are trading, if it's currency, you see you have them here, but the best way is just type and search. Just search if you know the, what's it called, the acronyms, okay? For example, if I'm trading gold, I'll say XAU USD. It brings them out. If I'm trading GBP USD, GBP USD, sorry, PUSD, brings them out, okay? You just tap it and then it show, okay? So let's go, let's leave it at gold. So let's say your account size is $500. Now, you don't want to risk more than 3% of your account size. So which means you don't want to risk more than 3% of this $500. Okay? Now, before you move on, I want you to know something because so you understand it clearly. Here, there are two options here at this part. You see, we call it risk ratio. For those of us who did mathematics in school, of which everybody did mathematics in school anyways. So, you know, ratio, of course. So that's like compared to, we are comparing compared to, okay? So when you say risk ratio, I mean, what amount of percentage would you like to use from this money? Okay? Now, that's when you are using what? Ratio. So you can use ratio using percentage, or you can use ratio using price, amount. So you see, we have two options for you. So if you want to use amount, which means you already know what 30% is. So you just type the amount here. That okay. Even if you don't want to use, let's say you don't want to use percentage, you just have in mind that, okay, how much can I trade with out of this 500 that will not kill me in case I lose it, that will not affect my psychology, that will not destroy my emotion, that will not traumatize my life, that will not give me hypertension. You know, just think of all those things that you could go through if the trade is ongoing and it's not going your way. So always think in that direction. The best way to think is what? Think, what if it doesn't go my way? Not what if I make money? So you use the amount that will not affect your psychology, okay? Or emotion, sorry. Now, so if you are the type that you don't want to use risk ratio, you want to use amount. Maybe you don't even need percentage. Just know that at least $500. Out of $500, I can spare 20. I don't care how much percentage that is, but I don't want my money to be more than 20. So you are telling the system, that system, please tell me what position size I will use to make sure that, to ensure that when this trade doesn't go my way, it will only take this amount from my money. So let's say you say, okay, I only want to spend $30. You can come here and use amount. But if you are the type that you want to use ratio, percentage, then you can come here and change it to what? Percentage. So you use 3%. If you are sure of your percentage, it's 3%, 2%. But according to professionals, any trade you are taking, you should not be using more than 3%, and you should not be using, I mean, between 1 to 3%. Now, that is different for MFF accounts, which I'll talk about a bit, okay? So 1 to 3%, okay? 1 to 3%. Time is fast approaching now. So 1 to 3%. So let's say you choose 3%. But this thing we are saying, 1 to 3% is still subjected to your discretion. You are the one that knows how much, that you know that if it goes from your money, you will not feel it. So if you feel that, 5% out of your money will not affect you, fine. But it's always good to just put it between this. So let's say you use 3% now. Now, stop loss. Stop loss is not your own issue. Stop loss is what you see in the signal. Okay? So now, just like the risk ratio, stop loss also have what? It has 2 options. So if you want the stop loss in pips or in price. So what does that mean? So here now, when I gave you BTC the other time, I told you your entry price is 30,000. Your stop loss is 28,000, right? Now, that is stop loss, okay, in price. So in case, most times what we give you is stop loss in price, we don't give you in pips. In pips means I tell you that, okay, guys, your entry point is 30,000, your stop loss is 28,000. I will now write in brackets, our stop loss is 30 pips. Then you can use this other one, okay? You can use this other one, you just write 30 pips. It helps you straight. You don't need to do calculation. But in case you don't know the pips, just change it to this price. So what do? You put the entry price. So for example, the last signal I sent to you guys, I said sell gold at 1928. Okay, and I think I used the 1920 also. I can't remember the stop loss, sorry, 1932, I think so. You see it now. So you just impute it like this. The moment you do this, the system will help you calculate all these things. So the moment you're done, so what do you need to impute? Remember, the price, the currency, the instrument you are trading, the account size, the amount you have in your account, the percentage you are willing to risk, the entry price, the stop loss. The moment you input all this data, which are already available to you, you come straight to this part. It will tell you 3% of your $500 is $15, which means if this trade goes or don't go your way, you only lose $15. Now, the stop loss calculation is 400 pips. Now, guys, when you see, sorry, I say 400 pips, I'll say 400 points. When it comes to gold, I don't want to confuse you, but when it comes to gold, only gold. When it comes to gold, they use points for stop loss. Okay? They use points. Now, for gold, when you see 1 pip, it means 10 points. 10 pip means 100 points. 100 pips means 1,000 points. So when you see 400 points here, it's talking about 40 pips. Okay? So the extra is just not important. The last one is not important. The first one before the last one is the most important one, okay? So if you see 4,000 here, it's talking about 400. If you see 400, it's talking about 40, okay? So now it's telling you that, the pips is 40, which means 400 points for gold, okay? Now it's saying your position size is 3.75, which means that if you look at this unit here, because it's gold, okay? OZ means what? OZ means pounds. In terms of, sorry, forgive me, not pounds. My God, I cannot forget that. Ounce, OUNZ is a unit of measurement in when you're measuring things. Ounce in the English way of measuring, okay, measurement. But we don't need this one. Don't focus on this. Ounce, okay, ounce. Don't forget. Okay, but we don't need it. What you need here is this. The whole thing you've been doing since the only thing that concerns you is this and this. Okay, so this system is telling you that if you are taking this trade based on your $500 account, you must, the total lot size you should use must not be more than 0.038. If you do this, if you lose this trade, you will not lose more than $15. Okay, but if you win, you will make more than this one. But if you lose it, you will lose more than this one. So if you do anything outside this one, there's a problem. So quickly, what does that mean now? That means focus on standard alone. So you already know what to use on this trade. So that means you need to record this. I mean, keep it somewhere and remember that this is what I will use on this trade. Now, let me give you a hint to make it easier for you. For my own signal, now I'm not talking of the one you take from other channels like Manara. Meanwhile, you should be taking trade from all those channels. They give very good, accurate trades. Manara trade sessions and trade and sessions. Eminence trade ideas, they are okay too, you know, and I think some of them, Nepal and the rest of them. But mostly focus on that Manara trade sessions for gold. They are very good at gold. Now, for my own, the one I sent, I always use 50 pips most times. So even if I don't use 50 pips, so a bit higher than 50 pips or a bit lower. So always calculate 50 pips for my trade. So just assume 50 pips. So to make that easy, instead of you wasting, using price, or you can just use the price. When I give you an entry and I give you stop loss, you can come here and calculate. But if you want to maybe make it fast, you can just come here and change the pips and just put 500. 500 points means 50 pips, remember. So I hope you understand this. And when you watch the video later, you understand better. So what your focus is on this, what's called standard lots. Now look at the standard lot now. It has changed because I changed it to 40, from 40 to 500, right? From 400 to 500, which means from 40 to 50. So it's now changed 0.03. Do you know what that means? That means anything you would do, even if you're entering 4 positions of trade, 5 positions, when you calculate all your risk size, which is your position size, which is your lot size, it should not be more than 0.03. Now I will put it in practice. You see what I'm saying? Remember, I'm talking about risk management. And the first thing I talk about is your psychology, which is what? Make sure you only trade with the amount you are willing to lose, that you can afford to lose. And in that brought me to this calculator to use this to help you calculate that amount to make sure that when you are entering your lot size, because that lot size is what will determine how much that will be taken from your money in case of loss. But in case of winning, it's also determine how much you will make. Do you get? All right. So of course, all of you go and watch video at on your back office. Okay, talking about pips and all those things. Like this 0.03 now means 30 cents. 30 cents per pips. So if I send you a trade and I tell you that 60 pips in profit, you just multiply it by 30 cents. You understand? Which means that's like $18 for you. 30 cents times 60. That will give you $18, right? So you make $18 profit. But when you lose, you only lose $15, right? So what about if it's 100 pips? That means you make $30. But when you lose, you only lose $15. Do you get the point now? You get this when you watch it again, okay? All right. Now, remember, we're talking about risk management still. And I talked about 3 things from the beginning. I said the first one is securing your capital, which is by making sure you only spend small money that you know you can afford to lose from your money. That's number 2. And I said, number 2 is what? Securing your profits. How do you secure your profit? Now, this is very important. A lot of you make this mistake, like I said from the beginning, okay? Now, let's go to that. So this part, I'll be sharing my whiteboard, not the screen anymore. If you have any question, you can type them down. I'll look at them after this class, close of this class, okay? So let me share my whiteboard. All right. Now, guys, how do you take profits? How do you secure your profit? Sorry. Now, I'm going to show you, before I do that, okay, so sorry, let me show you something. Okay, no, let me explain it before I show you. So there's one we call, I want you to write this down, okay, guys? There's what we call break even. Break even in Forex trading. Of course, we don't break even in business generally. but now break even is forex trading, which we refer to as BE. I want you to learn this term today, this particular term, okay? I want to learn it today, okay? BE. Whenever I tell you BE, I talk about break even, right? Now, under the BE, we have two types. We have BE. No, not, I think I won't use it that way. I won't say under the BE. I think under the break even, we have three types. We have the break even, number one. Number two, we have the break even plus. We have the break even plus. Okay? We have the break even plus, we have the BE break even, we have the break even plus, and we have the break even plus. If you are following, okay? I mean, I need you to follow this very clearly, okay? Break even. Okay, now break even is talking about a process where you secure your capital. That's the break even. That's number one. That's a scenario. Let me use a scenario. A scenario where you secure your capital by moving your stop loss to N2. I will explain. I hope you've written this down because I'm going to be cleaning it. Okay. Now, let me explain. Remember, when you use your calculator and the calculator gives you the amount you are bound to lose if this trade doesn't go your way. Remember, it's calculated based on the stop loss that, oh, this thing doesn't go your way and you start losing. It should get to a limit where this loss will stop, and that limit should not be more than $15 from your money if you are using $500 account and 3%, right? Now, let me put it in figure. Let's say I put in, remember in the calculator, let's go back to the calculator now. Remember in the calculator, I said I gave 1928 to enter a sell for gold, meaning you expect the price to start going down from here. Now, and I put 1932 as a stop loss. So what does that mean? That means if you notice, stop loss price is higher than the entry price. This only happens when you talk about sell. Because when you expect the price to go down, you expect the price to start going to 27, 1925, 23, then you are in profit because it's going your way. But if it doesn't go your way, instead of going there, it's going up. That's it, 1929. Now that is loss. It's showing you losses in red. Okay, 1930, 1931. But when it gets to 1932, it will stop the trade. Why is it stopping the trade? Because you are giving instruction that only take 3%, and your 3% can only go as far as 1932. And that 3% will take $15, right? Now, in the case whereby you now enter this trade, it's now going your way. That's how to secure. So I'm talking about break even, right? The moment this thing goes your way, let's say you enter the trade now, okay, at 1930, 1928, okay, 1928, and this trade now keeps going down, okay? Remember your stop loss is above here, 1932. It means if this trade goes opposite of your direction, the moment you get 1932, you take your loss from here. But now it's going in your direction, so which is good thing for you. Now, what do? So let's say this trade now gets like 1925. That's 1925. Guys, pay attention. Now, 1925 minus 1928, that is 3, right? That is 3, right? So that 3 means 30. That's gone 30 pips. So now, this is in your favor now. If it goes this way, this is your favor. Now, for me, my formula is the moment I see that the trade has gone down like 20 to 30 pips, which means from 1926 to 1925. Or let's say it's from 1925, which means it's about 30 away. You know, it's actually 3. If you minus this, is 3. But you know, the calculation use 0, but don't worry, put the 0 to 30, but that's not the point. The point is, the moment you start seeing tangible profits that you're okay with, at least if not for anything, you are already seeing almost the same amount as the amount you budget to lose if the trade doesn't go your way. Let's say you start seeing like $15, or you see $20, $30. Okay. Now you need to what? Break even. How do you break even? Remember your stop loss. That was 1932, right? You now go back to your trades. How do you go back now? You go back and modify. Remember what I did the other time on this particular trade. where I clicked on modify. You tap it, you click on modify, go there and change that stop loss to your entry price. So if entry of this one was 30,000, now the stop loss now I'll change it to 30,000. Do you know what that means? I'll show you what it means now. So for this gold now, for example, if your entry is 1928 and your stop loss was 1932, you now change that your stop loss to the same price as your entry price to 1928. Do you know what that means? That means the moment you are in profit and you put it to 1928, you have secured your capital. That's the first thing. That's what break even is. It means if this trade now, let's say, change its direction, now start going up again against you. The moment it gets to 1928, it will stop the trade by itself. And when it stops, you will neither make profits or nor lose any money. So meaning you are free. Your capital will be the same. You will make profits and you will not lose. That is what they call break even. And we only do that after the price have gone in your direction for a while. So you secure your capital. That is BE. I hope you understand. That is BE. I will show you an example of BE now. Let me show you an example. I downloaded something. Let me see if I still have it here. I downloaded something. I'll show you in graphical form. Okay. Actually, I will show you on the chat, but let me just show you in the graphical form here. What is it? I know. Down that. Okay. I think I have it here. No. It's not it. Sorry, guys. Download. Okay. Don't worry. I can show you on the chat. Let me just show you on the chat. It's supposed to be here. Download. Okay, should be pictures. Yeah, we have it here. Okay, guys, see what it means. Can we look at this together? So look at this trade idea. Here now. So this is talking about, oh, sorry, I have to share my screen. Guys, are you with me at all? Are you still with me? I want to be sure you guys are with me. Okay, because if you are, sometimes when I'm doing some things and you're not seeing it, I expect someone to say, oh, but we're not seeing what you're saying. You know, that's how I know you guys are with me, but it's okay. All right. So let's use this for example. Look at this trade. Let me see if this one is okay. Let me check another one. I think this one is good. But this one is good. Now let's look at this trade. Okay, this trade is calling for a buy. Okay, now look at it. So let's say this place, let's say this is gold. Let's say this is gold. Now here is where you bought. You have to buy gold. They say, okay, I say buy, guys, buy gold at this price. Let's say I say buy gold at 1923. And this is 1923, for example. Let's say this area is 1923. So you see, this trader, this is where you buy your product, your gold, right? You buy here. So what do you expect when you buy here? You expect the price to keep going up. So if it's going up, you are in profit, right? But if it's going down against you, you are at loss. Now, where will you now put your stop loss? Anytime you are buying an instrument, you expect the price to go up. Stop loss is the opposite of your direction. So stop loss will be if it's going down instead of going up. So now look at this. So the stop loss, look at this instruction now. So the stop loss is placed here. Look at the stop loss, this red. It's placed below where you entered from. This was where you entered from. So the stop loss is placed just below it. So this is the stop loss. Okay. So read it now. It said, see, initial stop is placed here. So why? Because you're expecting that if this thing comes down here, it should close the trade at loss, a very small loss. But now, instead of it coming down, you now see the price going up. When you get to this stage, you see that you're already in some profits. So what do? You change this stop loss, you bring it to the same level as your entry. So even if it comes back, you won't be losing any money. And also you'll not be making any profit, but your capital will be safe. So that is stop loss. That is BE. Okay? BE. That's break even, means when you don't lose and you don't gain. Okay? Now let's talk about BE plus. Let me share my whiteboard again. Now, what is BE plus? BE plus means a situation whereby, let's say gold, remember, is 1928. Okay? Now you have cleaned the stop loss now. Stop loss is now the same as your entry. So here now you are now BE. You can't lose. And in case it goes back, you will not gain, but you will not lose. Your capital will be the same. But now see that this trade keeps going down. It has left 1925. It's now at 1921, which means more profit for you. Now, what is next to you do? You change this BE to BE plus. BE plus means you move your stop loss again from 1928. You now move it into profits. So the language is move your stop loss into profits. So how do you do that? So you now move your stop loss from 1928. Remember your entry was 1928. So you now move your stop loss from 1928. You can move it to, like, let's say 1923. So you see now, 1923. Do you know what that means? That means you have secured, remember the first three rules I gave you: secure your capital, BE, secure your capital, secure your profit, BE plus, secure your profit, which means now you have moved your stop loss down below your entry. So which means even if the market comes backwards, it won't take all your profits. It will stop at 1923, which will have given you some profits, which is about 50 pips. So meaning even if the trade close, you can never close at loss. Neither will you take your money. You must close at profit. You have secured some profit now, so you must always close at profit. That is BE plus. So the moment the trade moves some steps downwards in your direction, you move to BE, which is break even, which secure your capital in case it reverses. But the moment it goes again deeper, you what? You're not hearing me again. Oh my God. It's not possible. How come? Can you hear me now? Can you hear me? Hello?
We are hearing you, sir.
Okay. Dory says she's not hearing. I'm surprised. All right.
Maybe she should go off and come back.
So as I was saying, the moment you see the price going down, then you move your stop loss downwards bit again. Okay, you move it downwards into profits, which means you are moving it into profits. Do you get my point? So no matter what happened in this trade anymore, you must be at win. Even if you leave this trade and you go and sleep, remember you have set your TP. Let's say your TP is, you set your TP at, which will take profit. Which means you have set the system that when this trade gets to 1919, you should close your trade at profits. Okay, so even if you leave this trade and go and play, okay, even if the trade changes and start going up again, it will still close your trade with profits. So your capital is secured. Now you have gone beyond losing money. Now you are now already securing profits. You have gone beyond not making money again. So remember, BE already only protect you from losing, but BE plus will not just protect you from losing, will secure some profit for you. Okay, so that is BE plus. Hope you understand. Now, and luckily for you, if it keeps going downward again, now what is now BE plus plus? So if it keeps going downward again, and luckily for you, it gets to the TP, then that's the best thing that can happen to anybody. It will close at huge profit for you. So let's talk about BE plus plus. I've explained BE plus. Let's talk about BE plus plus. What is BE plus plus? Now, this is the part I'll be talking about your lot size. Remember, when we calculated your lot size, let's go back to the calculator again. Remember, the calculator says we should use 0.03, right? Position. The calculator says you should use 0.03 to make sure that 0.038 to make sure that you don't lose more than $15, right? So now the question now is this: how do you want to use your 0.038? So let's say you enter this trade idea with 0.038. Let's go to the BTC. Let's use this. Just picture your mind, assume it's gold because the market is not open, so we can't use gold. So let's say you enter a trade now. Let's enter a new one. Let's enter a new one. Let's say you enter a buy, a new, or let's say you enter a sell. Let me just use sell. Okay, let's use sell by market. But your lot size now, remember the lot size. This is where you put the lot size, 0.38. You see it now, right? Or better still, don't worry. Let me use the one that is in profit. You understand better. Okay, look at this one that is in profit now. I want to show you BE++. Now, so remember this one that is in profit. Remember you go to modify.
The screen is not showing.
Oh, thank you. God bless you. See, I'm sharing the whiteboard. I'm not sharing the screen. Let me share the screen. God bless you. Now I'm sure that you guys are with me. All right. So back to the screen. So remember this trade, the buy trade I called that first for BTC. So now it's in profit, right? So let's say, remember the profit. I said that I entered it at 30. Let me see where I entered from. I entered it from 30,133.61. This is the entry price here. The entry price is always shown here. Look at the entry price here. Okay. So let me delete it. That's the entry price. 30,133.61 is my entry price, right? Now, if I want to secure my money, which is BE, what do I do? Remember it's a buy, right? So if I want to secure my money, I'll come here, click modify. I will now put the stop loss at 30,133.60, which is the same as my entry. So even if this trade reverses, it will not take my money again. It will only take the profits. So I won't take profits and I won't lose my money. That is BE. Now, but if I want to do BE plus, what will I do? Now I enter this trade as 30,133.61 and I put it for a buy, which means I expect it to go up. So, and I want to secure some profits. So what will I do? Presently now, look at it. The market is at 33,153. I entered at 33,133. So what do I do to secure some profits? I'll move my stop loss a bit above this, my entry price. Okay, but not up to the current price. So what do? I go back again. Let's choose, it's 160 now, right? And I'll enter at 133. So I'll just put my stop loss at it's 158 now. I can enter it at 143. So this is BE plus. So which means if this trade is going to go bad, no matter how bad it goes, I will still make some profit. Now I've gone beyond securing my capital. My capital can never be at loss or at risk anymore. Also, there's no way I can close this trade without making some profits because I put the SL at 30,000. Look at the SL. Look at the SL, guys. It's now 30,143 here. Look at this place. So if the trade closes now, it must close at 143. Secure some profit for me. That is BE plus. Now, what is BE plus plus? BE plus plus is I've already put my stop loss at 30,143, which is secure some profit for me, right? But still, I want to take some profits. Also, I want to close some of these profits. How do you close some of this profit? You now you click on close. Look at it. You click on what? Close. But you are not closing everything. So you remember your lot size was 0.05, right? Guys, I want you to focus on something while I do this. As I'm adjusting the lot size at the top there, I want you to focus on this side, this profit size. Look at the profit now is 1.34, right? So it's asking me if do I want to close this trade now at this 1.32? Okay, now I want to focus, but I'm not closing at the whole thing. I just want to take some of the profits to secure plus, right? So what do? I'll come here and I'll reduce this. My size was 0.05. I can take it to 0.02. So that means this will help me to take 51 cents out of this profit. So if I close now, my position is now 0.03. So you know what that is? That is BE plus plus. What is plus plus? BE is what? I've secured my capital. BE plus is what? I've secured my capital. Oh, sorry. Let me delete all this one. Let me use pointer. So BE plus is I've secured my capital. BE is I've secured my capital. BE plus is I've secured some profits. Okay? By using this. BE plus plus is I've taken some by removing 0.02 from my 0.05. That one has added profits to my account already. So even if this trade closes, okay, look at it now. I've taken out some profits, 51 cents. So even if this trade closes, number one, it will not take my capital. Number two, it will close at 31.43, which will give me some profit. Number three, I've taken some profit already before. So that has given me double advantage. You see this BE plus and BE plus now. This is how you should trade. Now, it is called trailing profit, trailing your profit. That's what it's called, trailing your profit. Let me come back to my whiteboard. It is called what? Trailing your profit. It is called trailing your profit. Trail. So for those of you who always close early because you're afraid, instead of you closing early, it's better you do it that way. So you can secure your capital because that's your fear. Secure some profits because that's another fear. Yet still be in the trade in case the trade goes to TP. So you won't be out before it goes to TP. So this is called trailing. Okay? That is how to secure. So remember the topic of today is what? To make sure you are not in fear while you are trading. And how to do that is what? By making sure you only trade what you can afford to lose. And how do you do that? By using the calculator. And what would that do for you? Gives you the lot size, the right lot size to use. And what would that lot size do? It will help you secure and make sure that it doesn't go beyond the amount you intend to use. And then secondly, I said that also how to what? To maximize, to make profit. Okay? To maximize your profit by using what? The BE, which secure your capital first. BE plus, which gives you some profits, and BE plus plus that allow you to take out some profits while you are still securing some in the trade. Do you get? So this is called trailing your profits or trailing stop loss, which means you are moving that stop loss according to the profits. You are following the bumper to bumper, such that you can never lose from this market. Do you get my point? That's if the trade is going our way. Now, this big one there, which I know confuses most of you, is this. How can I spread my lot size in different positions? That's what you should know how to do first of all. So when I tell you, like for example, someone was saying, if I tell you now, sell gold now, you've not seen the stop loss. You don't know how much lot size you should use, right? But I told you already, always calculate based on 50 points, which is 500 points, 500 points, which is 15 pips, right? But then you want to know whether you should use all of those 0.03 at once, 0.038 at once, like one position, or you want to split it. So it's always good to split it, okay? It's always good to split it. So how do you split? So what do? You divide this by number or position you like to use. So if you want to split, let's say you want to split in 3 places, you just divide it by 3. If you want to split it in 5 places, you divide it by 5. So let's say, for example, let me use a round figure, so we don't have to use calculator. So let's say your lot size after calculation is 0.5. Okay, let's say 0.5, and you want to split it into 5 places. So what do? Your first position, you can take 0.1. If it goes against you again further, it takes 0.1. They call it layer point. That's why sometimes when I send you signal, I would say set pending orders, set more orders with all this, the rest of your. So you make sure that you don't go beyond your lot size, but you have many positions. So you can divide it into 5 positions. So when you will take your trade, you take it in 5 positions and you make your profit. So guys, I'd like to allow you to ask questions because normally I stop by 10 and it's 10 already. Okay, so now you can ask your questions. I'll take like 3 questions and then the rest of the questions can be asked in the group. Okay, your questions.
If you have boss, can we modify lot size?
Yes, of course. Modifiers in terms of change it, right? Yeah, that's what I've been sharing. Yes, you can. The only thing you cannot modify is your lot. Oh, no, sorry. You can't modify lot size. Sorry. You can modify your stop loss, you can modify your take profit, you can't modify your lot size. The only thing you can do to your lot size is either you can close some of it. That's all you can do. You can't change it. You can't change it. You can only take some of it. Does that answer your question? Hello? Do I answer your question?
Yes, sir. Yes, sir.
All right. Who else? Any other question? Okay. Let me show you something. Look at this account now. Sorry, let me show you this account. I think let me show you this account. Like, look at this account. So this was last week. This last week that just passed now. If you look at the dates, okay, Monday to Friday. Okay, there were some losses, there were some profits. But look at the total profit here is 983 just for last week, right? Now look at this. This is a real account, okay? Now, I want to share something with you. If you notice, you see that here, I have a pattern here. I'm using all this 0.5, 0.3, 0.03, 0.05. Do you get my point, right? The same trade. I hope you are getting me. Can you guys hear me? If you notice, these are the same trade. Hello, guys. Can you hear me? Okay.
Yes, sir.
Can anyone hear me? All right, good. If you look at this trade, This was the trade I called that day. The one I called the last, what's it called? On Friday. Yeah. Is it Friday? Sorry. 05. Today is what? 8. No, this wasn't Friday. This was last week. Okay. Let me arrange it. Let me arrange it in another manner. Okay, good. This is from Friday now. So it's starting from last Friday down to Monday and all that. Okay. So let's say Friday. This was the last trade I called, right? Look at it. I took some. Now, if you see what I did here, I broke this account here. Look at this account. This account is now $5,000, right? But do you know that if to use the normal 3% of 5,000, it shouldn't be 0.04, it should be more than 0.04. But because I split, I broke them into parts because I know I'm going to be taking plenty positions because it's the same trade. If you look at it, it's the same trade. Okay, look at the sell. Remember that sell I called from 1928. So I wasn't even able to catch 28 myself. I caught 27, 25, 23, 23, 25, right? 26. Last sell that I called for NFP. You understand? So I couldn't get much myself, but at least look at it. But look at that buy I called before the NFP. Remember the buy that we did? Okay. Look at all these ones. You see that most of them are the same trade, but I used this particular 0.03, but plenty places. So when you add this together, it will fit into my exact lot size I want to use. But it helps me to take different positions. So that was what I was talking about positions and positions and positions and positions. You understand? So if you look at this account, it started from 1.5. So far, 3,295 in 1 month. Did you get it? Because it started from let me use other ID. Started from June. It started from 1st of June. No. Sorry, that's wrong. The deposit was made on 19th of June. It started from 19th of June. Let me show you. 19th of June, 19th of June. Okay, this is May. This is June 19th. Okay, yeah, 19th of June, yes. Today is what? Today is 8th. Right? Done. Let me see if I'm correct. Yes, I'm correct. Guys, look at it. This account started from 1,500, 19th of June. Can you see it? Can you see the deposit? 1.5. Can you see it here?
Yes.
Good. And then there are losses, there were wins, there were losses, just like we all lose. But my losses were controlled. If you look at this, I wasn't over leveraging. I splitted all my but at least. So far, so good on this account. Look at it. This is the summary of the account. So the account started from 1,005, profit so far 3,563, and the balance now is 5,663. And because I couldn't make use of the NFP because I was on my way to the mosque, remember guys, I couldn't take much. If I stayed for not the mosque time, at least that NFP could have given me minimum of $1,000 because it was a very sweet deal, but I couldn't because I'll just give you, I just had to close them on time because I was going to the mosque. I can't leave it because it's a news. It's not something that is technical that you say, okay, to get to TP, just take some you can take and close. You get my point, right? But anyways, in 1 month, guys, it's not even up to 1 month because 1 month means from 19th of June to 17th of, let's say to 18th of July. Are we in 18th yet? It's not up to 1 month yet, right? Today is, because I started 19th of June, and today is what? What's today's date again? 8. Guys, let's go check. I'm a Nigerian and I live in Nigeria. 3,000 plus USD in less than a month, 3,563. Let's go check. What is my calculator again? This is why you should take this academy seriously. I mean, if it's going to take your sleep, it's worth it. Let's say 3,560. Don't worry about the rest. Current rate is about 770, I think, or thereabouts. That's 2.7 million, right? Less than a month. So imagine you do this every day, every now and then. Tell me how you do. Just tell me why you won't be the richest guy. I have videos of guys in this academy who already in making like 100K. I know one guy, call him Coach Carter, is in our team actually. He's also, I think he's project 3,000 now. The name is Coach Carter. He's from Belgium. The guy, oh my God, the guy started with MFF. That guy now, his account is running in 200K, $300,000. We need this money more. I mean, just picture yourself having 300K USD in a month. Do you know what that is? Now, it's not about the money. It's about what the money will do in your life. Many of you right now, there are things you want to do right now, but the barrier between you and that thing, that dream, that program, that project, that that purpose is this money. Now, the good thing about this money is, you know why I like Forex trading? It doesn't just give you money. It gives you freedom of money, freedom of time, and freedom of location. I always say this, freedom of money, because you can't put a limit to the amount you can make in Forex. Freedom of time. I mean, after trading, like me, I like to trade only 2 sessions a day, London and US. And I'm done. I watch movies a lot. I like to watch a lot of movies. Extraction 2, Guardian of the Galaxy. I've watched all those movies. Just name all the latest movies. I'm a movie person, right? Then I do other things. I study and all that. I have no time to do that. Then lastly, location freedom. You can be anywhere in the world. You can relocate to any part of the world. You don't need to think about looking for a job, all those nonsense that Nigerians will do for years to get a green card. And as a matter of fact, talking about green card or being a citizen of any country, you can be citizen of anywhere in the world if you have your money. There's what we call citizenship by investment. Most people don't know it because it's for those who have money. If you want to be a citizen of the United States now, with an investment of about $450,000 in the economy, whether you invest in real estate property, you buy house or houses that will give you money, or you invest in their bond or treasury bill, which all these things will give you money. You invested, you are not giving them, they will give you citizenship. And if you are married with your children, they'll give all of you. You don't have to work and look for green card. If you invest about $500,000 in Dubai, you get resident permit. They don't give citizenship, but they give resident permit. If you invest like $150,000 in Cyprus, in all these new European countries here and there, $150,000, $100,000, you become a citizen. Before you leave Nigeria, before you leave the country, they will produce your passport and your family passport and send them to you. You guys will be going there as a citizen. Life is easy with cool money. And let me tell you the truth, there's no way. Show me one way that will be this fast for you to make this kind of money. Show me one business you want to do. But this is it. Now, do you know why you need this academy badly? Why you need to come into this academy and invite more people to come in? It's because, number one, instead of you to spend years that most people who are rich in Forex trading would spend before they start making real money, because they have to do trial and error, lose some money, and they lose a lot of money before they get to the level where they make profit. You don't need that, because you leverage on the expertise of those who have done that. So you can just be taking signals and be eating money like somebody who's already a guru in trading. Number one. Number two, you don't have to lose money, because look at me. The first training I'm giving you now is how not to lose plenty money. But all these guys, if you are on your own, nobody will teach you all this stuff. You will have lost. Okay, if you ask the richest, there was a guy that was being interviewed. This guy already made over $1 million in trading. in Forex. And when they asked him, what was the secret to success? He said, blowing tons of accounts, that he has blown tons of accounts before he got it right. That's the secret. Can you imagine? You know, ask him that, what's the average? I should give them average, how much has he blown, as in lost. He said over 500K. Are you ready to lose $500,000? There's one guy they call Abi Forex. That guy said he has lost over $70,000. If you ask all these guys, because they did this thing on their own. But now you guys are lucky. There are academies like this where you don't have to go through all those long routes, longer years and more money blowing. No, you be on the right instructor, under the right instructor and the right mentorship and guide, and you make more money. Now, why do you need to invite more people to come and do the same? So it gives you more money to fund your account. But let me tell you, see, if you trade with $100, you're cheating yourself. What I say is simple. The lot size you use will only give you $20. But if you have $1,000 and above, you make money faster. Like imagine if I started with $200 or $100, I would have made profit opportunity as much as 3,000 plus within just less than a month. Guys, wake up, wise up, and let's make our dream come true. It's nice having time with you tonight. My job for you tonight is make sure you think. I give you all this so you will not be comfortable tonight. I don't want you to be comfortable.
I have a question.
To think and think. Yes, please. Okay, go ahead. Ask your question.
Okay.
Only two questions.
Question, yeah. I noticed that when you say let's buy, there is more assurance in making profit than when you say let's sell.